Right now, for a read on where some of America's wealthiest individuals are putting their money, we are joined by Robert Frank. Robert, good morning.
Morning, Becky. Good to see all of you. For family offices, deals in the third quarter were all about AI, biotech, and energy. Direct deals by family offices and startups fell 46% in the third quarter. That compares to a year ago. That's according to exclusive data from Fintrix. Now, there were only 169 investments recorded by family offices in the quarter. The tech billionaires, well, they're leading the way. Peter Thiel's family office made 7 investments in the quarter. He was part of a $100 million funding round for Descartes. That's an Israeli AI firm that was founded just 2 years ago, now valued at $3 billion. He also invested in a German drone maker, a gene therapy startup, and a company called Varda Space, which is working to develop medicines in orbit in space. Michael Dell's family office invested in the Austin-based Harbor Health. That's a clinic and health insurance company. And Jeff Bezos and Eric Schmidt both invested alongside NVIDIA in a $300 million seed round of a company called Periodic Labs. They aim to create an AI scientists that are going to run robot labs to create new materials. So fascinating company there. For more on the family office news, including highlights from our latest family office roundtable dinner last week, you can sign up for the Inside Wealth newsletter coming out tomorrow at cnbc.com/insidewealth. That's cnbc.com/insidewealth.
Robert, I have to say, I'm not shocked that AI plays such a big role, or biotech. These are family offices, I guess, that they're always on the bleeding edge of things, always finding the hottest, latest, greatest.
Yeah, and I think the reason that deals are down is because the mega cap AI private companies like OpenAI, Anthropic, xAI are just sucking the oxygen out of the room with capital. So there are fewer deals, but more money chasing these mega cap AI companies. And so that's why I think one of the reasons you're seeing a decline in deals, 80% or so of family offices say that AI is their top investment theme. So that's where all the money is going right now.
What was the biggest surprise you had at this roundtable dinner? The biggest takeaway?
There was a huge discussion over private versus public and whether you're actually getting paid these days for illiquidity. The idea for family offices was you're getting higher returns and less volatility by keeping your money in these alternatives. Now those returns have come down, so is it really worth the trade-off?
Is that why we see this push for alternatives to the retail investor?
It's certainly one of the reasons is because family offices and institutions, they're not putting more money into private equity because they're not getting the cash out. And so these private equity firms, private capital, they need to go out and raise funds from other groups. So that's certainly one of the reasons. But there was a huge debate about that, and also about fees. The 2 and 20, a lot of family offices were saying, why should you pay a 2% management fee? It makes no sense. And there was a big debate about that, too. So, again, this whole intersection of private versus public markets. And a lot of family offices now are putting more money into public equities because the returns are very good and you get liquidity.